You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. And now, get ready to hit the Option Block.
All right, let's hit it indeed, listeners. It is Monday. It is noon Central. It is 1 p.m. Eastern. It is time to commence operations here on the network with everyone's favorite. I know it's my favorite. I hope it's your favorite. Probably one of the only ones really still a decade plus later. Bi-weekly options extravaganzas known around the globe as the Option Block. My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network upon which all of us are mainlining these days. You can't see, it's not a video show. Thank God, listener, because I'm punching the air with all my points. I'm fired up, had some caffeine this morning, so I'm feeling good. I'm feeling raring and ready to go. And of course, if you're enjoying what you're hearing, this show, anything else we do here on the network, a like, a star, a comment, a rate, review, any of those helps in aggregate all the legion of new folks, and trust me, they are legion, to discover the content out there these days. And if you want to discover more in your lives, let's say, I don't know, you like yourself a little bit of a good pro Q&A action, you like to pick the brains of some of the best minds in the world of options and derivatives, well, you can do that. As well as, of course, you don't want your broadcast week to end with, let's say, I don't know, vol views on Friday. You want to come back for some options oddities fun. Let's say, I don't know, you like to win fabulous prizes. Let's say, I don't know, you like exclusive content like the panel I did with the Flow Master and a bunch of others back from the STA conference, or early access to a lot of great stuff like the sit down I did with the SCHW folks recently and a whole bunch of other fun stuff. Let's say, I don't know, maybe you like to win fabulous prizes or have access to live streams every day pretty much of the trading week. Well, only one place to go to get all that fun, theoptionsinsider.com/pro. I've been remiss on welcoming all the new folks who've been joining up lately, so welcome to all of you folks out there. We love to see you all out there. Love to see the names in the chat when you're listening live. Love to see the questions you guys and gals send in for our pro Q&As. It's really a great group of folks. If you want to join up, listeners, talk a little bit of options, ask some great questions, get some great shows, theoptionsinsider.com/pro is the place to go as we go around the horn, listeners, and see what the heck is going on in the market, as well as who is joining us this week. We are joined on the Monday show by, of course, our old friends, Uncle Mike TOSAW from St. Charles Wealth Management, as well as by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. It is time for our 80s trivia segment. Before I kick it off, listeners, did some number crunching, did some data analysis before the show to see exactly where we stand right now, a little bit past Q1 here for our 80s trivia challenge. And right now, Uncle Mike is in the lead, as I thought, a pretty commanding lead right now. He has a full 5 points. The Rock Lobster has only 2. So the Rock Lobster has some digging to do. Can he add to his point total today? I guess we'll find out. 80s trivia time. Here we go. All right. 80s trivia challenge time. Here we go. A lot of different things we debated, but you know what? I've unleashed my producers on this, and they really seem to be enjoying it. They came up with another good one today here, so I shall take no credit for this one, listeners, but a seminal sci-fi film came out in the 80s. One, you could argue the design, the setup, kind of the dystopian view of the future has impacted almost every other sci-fi film ever since. You see it in a lot of the set design, costume design, the characters, all that fun. It was an 80s film. It depicted effectively rogue androids known as replicants. And they were hunted by these android hunters who were also the name of the title, the name of the film. All right, we have a buzz. There we go. Mr. Rock Lobster, sir. What is the name of this seminal?
Blade Runner.
Yes.
Blade Runner.
Blade Runner. There you go. You got it, sir. I could throw all kinds of bonus points on this one, which will be ridiculously hard. Like, what is the name of the actual Philip K. Dick novel that it was based on? I read it. I don't recommend it. I'll just answer it for you. It's called Do Androids Dream of Electric Sheep? Terrible title. Blade Runner, a much better title. That's why they went with it, obviously. I think if the film was called Do Androids Dream of Electric Sheep, no one would have gone. And it would have vanished. It would have vanished into the ether. I'll never forget, I read this in college in one of my English classes I had to take. And the instructor came in, threw the book on the table, and said, "Where the hell's the Blade Runner?" Which is pretty much a great synopsis of that short story. If you expect Blade Runner, you read that story, listeners, you're expecting Blade Runner, don't. It has literally nothing to do almost with it. Maybe some of the names of the characters are the same, but that's really about it. There's very little android hunting. There's no blade running, anything like that. All right, so full point for Andrew. There we go. Closing the gap. We'll give Uncle Mike a chance to swing back, though, for half a point. Mr. Uncle Mike, it was in the 80s. What year did this seminal 80s sci-fi film come out, sir?
1987.
Oh, that's pretty late. No. 82, sir. This was 82? An early 80s film.
I would have got another point.
Oh, you knew that? You knew that?
Yeah,
oh.
I knew that one.
I guess I could have opened it up to everyone. I'm just trying to be even Steven
okay.
over here.
I do. I got a 4-point deficit here, man. I'm climbing up Mount Everest to catch this guy.
Getting bat now. 1 point for Andrew for Blade Runner. So there we go, listeners. Did you get that? Did you know Blade Runner? My producers actually wanted me to ask you the name of the test that they did to determine if you were an android or not. It's called the Voight-Kampff test. I don't think anyone would have gotten that. So I did use my executive power to veto that. You two should be thankful.
Yeah,
that would have been pretty hard.
I had no chance on that.
Yeah, that's a pretty hard one. But the name of the film, the year, I thought you had a chance. Did you have a chance, listeners? Let us know as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, welcome to the Trading Block, the portion of the show where we do just that. We break down what the heck is trading, what is lighting up our tapes out there. Another weird one, listeners, on the heels of what was clearly a weird one, maybe a spooky one to end the week. We don't often get these weird geopolitical warnings like we got last week that's saying, hey, Iran is going to do something kind of naughty coming up this weekend. Maybe you should keep your powder dry out there. So a lot of people took that as an excuse to just crush the market, pop VIX, threatened a 19 handle at one point out there in VIX cash land. Things were looking juicy. Things were looking frothy on Friday. Over the weekend, of course, we did see this much anticipated response from Iran. 100 plus drones, I think, 30 plus cruise missiles. Thankfully, all of which were intercepted. No loss of life really involved in this. So that's a good outcome. Iran also coming out and saying, we consider the matter closed, which when I heard that, I thought, okay, here we go. Rally ho on Monday. VIX coming back in. VIX 13 puts, dare I say it? Are they back in play? Well, the answer is no, listeners. We were rally ho earlier this morning. Most of the major indices, S&P included, we were up to, it looks like about, north of 5160, about 5165 or so. Given pretty much all that back now, we're now off about 0.2%, right around 5115, 5114 or so like that. So a lot of topsy-turviness out there. We were green, then they're all red. Now the Dow is just unched to green again, slightly 0.01%. And the NASDAQ off about 0.45% out there. So it's another one of these days where it seems like the market is struggling to digest this news. S&P, I should say, the small caps off nearly a full percent right now, 0.9%. Does seem like the market may be a little bit concerned about the Israeli response. So that keeping things elevated and getting more elevated. As we were coming into the start of the show, VIX cash was hanging out at about a 17. That is still pretty frothy. It's up about 1.2 points or so from where we were on the Thursday show. As we commenced operations, though, it had gone up to about a 17.8. That puts it up exactly 2 points from where we were on the Thursday show. So things were looking frothy again. We were threatening an 18 handle as we kicked off the show. VVIX still staying frothy, 98. That's up 6 points from where we were not too long ago. VXX 14.75, up about 2/3 of a point from where it was on the Thursday show. UVXY, you know it, you love it. We talked a lot about it on the Vol Views. You know what? Even still, some people wanted more. They wrote in thinking it's just a UVXY interview show, Vol Views. It is not. It is a actual volatility market activity show. We do discuss topics, though, just not for the full hour. So if you want a full hour of all things UVXY, dare I say it, look elsewhere. Or maybe we'll do a full interview show on that. But I thought half an hour of nonstop UVXY talk, pretty much a couple of days after a split, pretty darn good. So be happy about that. UVXY 38 up 3. I'm just joking. A lot more. Most of you have fun. Every once in a while, everyone wants more. Everyone wants more at the end of the day. That's what we're all about here on the content side. SVIX continuing to give up the ghost, 37 down 2 points. And UVIX back at an 11 handle, up a whopping full point from where we were on the Thursday show. So vol looking frothier again. Markets maybe not liking the rumblings they're hearing out of the Middle East. Let's go around the horn. Let's start with our victor, our champion today. A rare victory for the Rock Lobster. First off, sir, if you have any enduring memories of what is, a lot of films are called seminal. I certainly think from a design and just dystopian future perspective, Blade Runner is one of the most seminal films of all time in terms of just design and the impact it's had on so many other films. So if you have any thoughts on this seminal film, have at it. And then B, what's catching your eye in a very tumultuous and perhaps concerning start to the week, sir?
Blade Runner, again, you had great actors in the movie. Like Rutger Hauer and Harrison Ford, let's see, Daryl Hannah, Shaun Wood when she was like 18.
Look at you pulling all these names. By the way, our chat is stunned that you got it. Option God and Frank are both stunned that they say that they don't think you know any pop culture. So they were both flummoxed, floored that you got it, sir.
Yeah, Blade Runner, I've seen that movie a couple times. I liked that movie. It was you're right, but it was a lot of the theme. Ridley Scott, brilliant director. You didn't give me any of the easy extra questions. The producer is just evil with all the stuff she's pulling out of that movie. So yeah, a very, very good movie about, it's also this, what's funny too, is like the one company controlling everything. It kind of feels like NVIDIA's I forget what the replicant creating company is, but I think there's a lot of people invest in Tesla think that their robots are going to take over the world. So, Elon Musk seems a little more chill than that guy with the big glasses in Blade Hunter that was running that company. Anyway, from a market point of view, I would say, if I was the guys running Iran, I would be a little scared. You just launched a bunch of stuff at the Israelis and made them really mad, and they shot it all down. So interesting thing for the future of war. I don't know. I think there's a lot of stuff that happened this weekend that we won't know all the details. But I think overall that was a good result. If I'm Jordan or Iraq, I'm a little pissed that they launched those missiles over my territory just to have it blown up. So I'm not sure how many friends Iran made this week. But from a market point of view, and Mark was like, and I'm going to start to lean his way a little bit on this. Like, I thought, things look kind of like on Thursday, we kind of had that hard rally and vol was falling apart. And now it's like, maybe there's something else. I think there could be the inflation thing, like kind of reheating again. I think that's starting to stick its head out. Bonds are kind of falling apart here. And the Dow the S&P 500 last time bonds were this low, that was in November, where yields were this high was November 7th. And, the S&P 500 was below 5,000. So I'm not sure. Again, I think the market can exist with higher rates. I don't think the federal government can exist with higher rates. So I think some of these worries are creeping back in a little bit. As much as I would love to see stocks go up, because trading in a bull market is much easier. Even though the people on Twitter, FinTwit, won't tell you that, but it's a lot easier when things just go up every month. But as of right now, VIX is picking up, the market's selling off. And I don't think the news has changed tremendously from this morning. Goldman Sachs had good earnings. So I think there's a little bit of bond, could be a little rate worry, something, but it's definitely a little more real at this point, I would say.
Little real indeed, listeners. Is this impacting volume? Well, we'll find out in a minute. First, let's go out to the Uncleist of Mike's. Mr. Uncle Mike, sir, do you too have any enduring memories of the seminal film that is Blade Runner, or its equally in the other direction, not seminal book / short story? And then B, what's catching your eye in, I guess, depends when you look at it, maybe not Uncle Mike type of day?
Nothing to report from Blade Runner, but I actually like the book title. What was it? He says, Android's Dream of Electric Sheep.
Yeah, it's Do Androids Dream of Electric Sheep. It was about, making synthetic animals, pretty much.
That's an interesting title. I kind of want to read the book now, but if you told me not, since you told me not to, I won't. But
as a standalone book, it might be all right. If you're expecting Blade Runner, though, it is completely disappointing.
Got it. Yeah, in terms of the market itself, the main thing to me right now is that stocks, that they were up this morning at the open, but we've sold off. We're back to slightly down on the day. Last night, I remember just looking at the futures, just with the news of what's going on in the Middle East. And when I was looking at it, I didn't look at it that closely. I try to not look at markets on the weekends, but let's be honest, we all do it. But when I was looking at it, S&P was up 10 points. I'm thinking, okay, well, we should be all right. And then this morning, I believe we were up 45 at one point, or close to 50. And so we've given a lot of it back. And so I think that there's definitely concern in the marketplace at this stage. I think what the market is waiting for with the conflict in the Middle East would be is the U.S. going to come in and wreck shop and do what they do and fix everything? And I think if that does happen, I do think the markets will rally. That's something that I learned from Andrew years ago whenever we were discussing Middle East events, and that a lot of times markets recover when the U.S., not necessarily when the conflict is over, but when the U.S. comes in and says, hey, we're going to lay the schmack down. And then the markets seem to like that because it gives it certainty. The other thing that I'm noticing is that silver's back. SLV for silver is above the 26 handle again. 28 is kind of the number with which I'm watching. That's near-term resistance, and by near-term meaning in the last few years. I'd be interested to see if we could break through 28. So we still have a ways to go with it until I would fully say that the thief in the night has come. And then the thief in the night has come during the day in the bond world. There's definitely a sell-off in the bond world. People do not want to be in bonds at this point in time. And the lows that we had in the bond world were around October. And we're still a little ways away from that, but not very far. And over the course of 6 months, bonds have kind of gone up and gone back down. We're not quite to where we were in October, but we're getting closer. I think bonds are going to be a big sign as to where the stocks are going to go because of the fact that if everyone's really watching interest rates, bonds are going to be more reactive to interest rates because bonds can give two craps about artificial intelligence or earnings or things like that. Bonds just care about interest rates and other things. But for the most part, I think that bonds are going to be one of the leading indicators of this market for the rest of 2024. Of course, the other things with which I mentioned for stocks could overcome bonds, but if they don't, then I think bonds are something that we need to keep a close eye on, whether you trade them or not.
They are indeed. Listen, let's see what we're keeping an eye on out there right now from an overall markets and indeed a volume perspective. Is it a banger day? Are things really lighting it up out there? Well, I guess it kind of depends where you look. Yet again, if you're starting in the land of volatility, as we are wont to do right now, I think you could probably guess, given the developments heading into the weekend, and of course what's going on right now, that vol probably looking frothy, and also volume. VIX volume probably looking frothy, and the answer is a resounding yes. Already on the tape, listeners, 1.25 million contracts. I can't remember the last time we were this far north of a million this early in the session. So we could be looking at, if this pace continues, listeners, we could be looking at a record day here for VIX. So interesting stuff out there in the VIX land. 1.25 million. The ADV is only 796. That in and of itself is up from about 730, 740, 750 not too long ago. That's going to keep moving in the other direction, obviously, as we continue to see this volume just explode. Speaking of exploding volume, SPY no slouch today either. Usually we say around this time of day, 4.3. That's usually where we're leaning right now. Busy day, 4.5. Maybe crazy bonkers day, 5 million. 5.75 million contracts going up in SPY right now. The ADV 7.5. Really quickly, going back to VIX for a second. Just had to look. When I see that kind of paper, I have to look. What the hell is going on? Looks like the big dog right now, listeners, it looks like a roll. 118,000 of the May 18, July 20 roll going on. So obviously they're rolling up and out. It seems like they dumped the 18 calls for $1.25, paid $1.84 for the 20, so 59 cents on that spread. They paid for it. We went back and looked, actually, and the 18s, they opened back on the 2nd, so a couple of weeks ago now. So they got 2 full weeks out of them when VIX was about 16.15 VIX cash. They paid $1.31 for them. So they pretty much scratched these calls. They lost about a nickel, and now they're paying almost 60 cents to roll it out to July. So interesting stuff. They managed to get some value back for those 18s, and now they're looking, obviously, to keep the party rolling. Obviously, they think perhaps the upside partay in VIX not done. You like that spread, listeners? May 18, July 20 for roughly 60 cents. Are you a buyer or a seller? I get scared when I ask you that stuff because whenever you guys respond, you lead me down dark paths sometimes. Witness those VIX 13 puts that you rammed down my throat and the Rock Lobster's throat that we are choking on right now. Thanks, listeners. I thought you folks liked this. All right, let's keep on going. Let's go out to the land of the S, listeners. The S also on fire today. Like we say, normally a good day, 1.5 million, 1.75 is really good. Now we're at almost 2.1 million right now already in the S. So banger day. The ADV 3.05 million out there. Small caps following suit, 800K. The ADV is about 1.25 million right now. So they're looking on pace to beat that. And the Qs, 2.66 million. The ADV, 3.63 million. So the Q is also on fire out there. So a lot of paper lighting up the tape out there, listeners, when it looks at the broad market. Now, is that going to follow suit into the single name stocks out there? Is it a banger day, I should say, out there? Spoiler alert, no. VIX lighting it up, SPY lighting it up, VIX threatening records already, and small caps lighting it up. Single names could give an F about what the hell's going on out there right now, listeners. Microsoft, 166,000 contracts. That's not to say the underlying isn't moving. Microsoft, number 10, off a little over $5, about 416 3/4, about 1.25%. So the names are moving. They're just not delivering from an options volume perspective. Microsoft, number 10, only 166,000. That's all it costs to break into the top 10 today. That's kind of like mid-August, mid-December kind of numbers. Not a day when the market's whipsawing all over the place and VIX is already north of 1 million contracts, but that's what we're seeing out there. Number 9, keeping it in the M-named mega techs. It's Meta, the artist formerly known as Facebook, 172,000. Meta also selling off pretty hard today, off 12, almost 13 handles, about 1270, trading 499.25. It's off about 2.5%. Good for only number 9, 172,000 contracts. Number 8, listeners, we're going out to the cheaper, quote unquote, AI play. That is Palantir, 22.16 right now, off about 85 cents or nearly 4%. Trading 186,000. Usually this kind of geopolitical tension is a good thing for Palantir. They make a lot of they have a lot of contracts in the defense side, intelligence side. So this kind of brouhaha tends to be a boon for them, but not today. Coming off maybe the fact that it wasn't as expansive as some people feared. Maybe that's just weighing on it. Either way, more sellers and buyers in Palantir, and decent volume, but not a ton. Number 7, you can say the same thing for number 7. It's Intel. 36.16, actually popping half a point, so bucking the trend today. Good for 188,000, should just barely, just 2,000 more than Palantir out there right now, listeners. Number 6, going to electric cars, it's Rivian, $8.50, $8.46 actually, off about nearly 70 cents or 7.3%. So things not great. I know Tesla, of course, slashing jobs today, 10% of their workforce, I believe. So maybe that's weighing on this today. Usually that's a boon for the name that slashes, but also maybe a bad sign if that name is the bellwether for the EV market. And in this case, maybe that's what's weighing on Rivian. More sellers than buyers at the end of the day, listeners. 228,000 contracts. And the number 6 spot, number 5, it's our newest member of the Dow. It's Amazon, 301,000 contracts. 184, pretty much even, off about $2, a little over 1%. And again, good for the number 5 spot. Number 4, maybe you're saying, you know what? I like that, Amazon. What else you got in the A tech name cycle? And maybe even a little AM tech name. How about that? Let's keep that pattern going. Well, we got you, listeners. Never let it be said we don't deliver what you asked for. Number 4, it's AMD. 466,000 contracts. Do you like how I stretch, how I work to make these top 10 lists exciting and interesting for you, listeners? It's no mean feat. I defy you to have the Rock Lobster Uncle Mike do these. They would give up after about 6. AMD, what number are we at? I've lost track already. Number 4, AMD. We're having fun on the show today, listeners. A lot of caffeine fueling the show. AMD, number 4, 466,000 contracts. 159 2/3, off about 3 2/3, or about 2.25%. And again, good for the number 4 spot. And if you said, you know what, that was good, but I need a little more mega techs in my life. Well, how about number 3? It's Apple. It's the fruit company. 636,000 contracts. 174.41. So they got up there. They got up to 176 2/3 recently. So they seemed like they had a nice little bounce back going from the 168 level or so they were traded not too long ago. Giving up a good chunk of that today, 215 or 1.25%. They still have a long way to go, 6 handles or so, until they get back down to where they were just not too long ago. Intriguing stuff. So Apple, number 3, 636,000 contracts. You could probably guess at this point, if you tuned into the show once or twice, what our top 2 are today. But the question is, what is the order? And coming in at number 2, it's the AI boom. Getting a little bit of a bust today. Off 15 handles is NVIDIA. Trading 866 1/4, off 1.75%. Is the bloom off the AI rose? Is it all done? Is NVIDIA truly the new megacorp depicted so presciently in Blade Runner? I'll leave that up to you to decide. Number 2, NVIDIA, 811,000. That means number 1, you know what it is. You love it, maybe you hate it. Is the market loving it today? No, they are not. Crushing it yet again. It is Tesla. 1.25 million contracts on the tape, off $8.50 or nearly 5%. They're closing in. They're within 10 handles of their 52-week low now, which is 152 1/3. They're at 162 2/3 pretty much. So right outside spitting distance of that. I remember the last time it got down around these levels, all of a sudden it was like, oh my goodness, the headlines, they were dire. They're like, Tesla, they're done. They're giving up the ghost. They got a little bit lower that time, though. I'm looking back. This is beginning of the year last year, January 6th. They were threatening the 100 handle at that point, 113. So still a ways to go from that, about 50 handles. That's when the real dire headlines are coming out. Tesla threatening 100. The EV market is done. We all know what happened after that. It rallied all the way up to nearly 300 before now giving the ghost back up to about 162 2/3 today. So intriguing stuff on the tape. Speaking of intriguing stuff, we are in it, listeners. We are in the mix. It is earnings season yet again. So if you love hot earnings vol data coming at you hot off the presses from our friends over there at Oratz, also completely free because we like you folks. Let's see what we got here. We've got Goldman, as you mentioned, popping off today. This for the bell this morning, listeners. Then we had tomorrow, more financials. If you didn't get enough on Friday and today, you got Bank of America tomorrow, PNC, and our friends across the river here, Northern Trust and United Airlines. That's tomorrow. Wednesday, Abbott Labs, more banks, U.S. Bancorp, Alcoa, they of the rolled aluminum fame, and Discover. And then Thursday, we got Nokia and Alaska Airlines and Ally and something called Netflix, never heard of it. Friday, American Express and Fifth Third and P&G. So a lot of things popping off out there today. Let's go out to some of the names that were popping off before the bell this morning. How about Goldman Sachs? The Rock Lobster talked about them earlier. 389.5. That's where they were heading into this number on Friday's close. They were pricing in 3.5%. We've been saying some folks, at least in the financials, were pricing in some juice. Was it merited? Well, as of the time we ran this report, yes, it was. They were pricing in, they had moved about 4.1%. So outpacing their straddle. They have given some of that back now. They're at 405.5 when we ran this. Although they've given all that back now. They're back down to 400, pretty much even. Interesting. So give off about $5.50 in this little bit of a sell-off. They're still up about 2.8%, but obviously underperforming their straddle now. And if that's not enough financials for you listeners, we also had our friends out there, Chucky Schwab, before the bell today as well. They went into their announcement pretty much $70 exactly. They were pricing in an exact 5%. They had delivered, as of this report, 3.7%. And like Goldman, they have given that up as well now. They're up to about 2.2% now. 71.5 is where they're trading. So they're up $1.50, but they were pricing in 5%. So they're pricing in pretty much a $3.50 move. And they got $1.50 right now. So intriguing stuff out there, listeners. Bank of America after the bell, I should say before the bell tomorrow, 35.80 is where they were trading. They're pricing in 91 cents. They're pricing in $1.30. In the past, they've moved 91 cents. So still keeping the extra juice alive. J&J tomorrow, 147.5 is where they were trading. They were pricing in 3 2/3. In the past, they moved $3 exactly. So extra juice there as well. 16th before the bell for PNC. 150 is where they were trading. They're pricing in $5.70. Listeners, get this. In the past, they've moved 320. So they're not quite 2x, but they're pretty darn close what they're pricing in on their straddle. Let's go to everyone's favorite. Let's go to rolled aluminum. How about that, listeners? Let's go to Alcoa. They're the 17th after the bell. 35.20 is where they were trading. They're pricing in 227. In the past, they've moved 228. So not pricing any difference than last time or what they've moved in the past, pretty much. United Airlines, 16th after the bell. 41.80 is where they were trading. They were pricing in 314. In the past, they moved 248. So decent amount of extra juice there as well. Again, you can do all this analysis for yourselves, listeners. I could keep going. We've got to keep on going with the show. Netflix, intriguing what they're pricing in compared to the past. But I won't break it down here, listeners. You got to go to the website to check it out for yourselves. TheOptionsInsider.com is the place to go. Click on the Options News and Articles tab so you too can dive deep into the world of earnings volatility. Right now, with a whopping 13 names reporting, listeners, we're at 102% in the cycle. So keep an eye on all that fun data as we keep an eye on some other fun data, including some weird prints. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's do it, listeners. Let us commence operations out here. See what we got popping off for us here on the old network, listeners. First, let's go out to, this is a sector we've talked about a lot mostly on oddities, it seems like. We had some fun out there in Verizon and some other related names out there. This one now coming in more on like the handset manufacturing side, but still broadly under that telecom rubric. This is everyone's favorite Ericsson. I won't even attempt to butcher their actual name out there. Go look it up if you want to give yourselves a fun pronunciation test. Conservatively, 8 syllables just in the first word of their actual names. Go for it. Let's just call them Ericsson here. Ticker symbol ERIC, E-R-I-C. Trading 483. Off about 6 cents. They have an earnings call coming up. Looks like after the bell later today. Either way, not liking the stock today. It got up as high as nearly $5, trading about 484 right now. On the year, though, a year ago, almost $6, 592. Then they kind of crushed it all the way down to take a guess when it bottomed out. If you've been listening to the show for a while, you can probably guess a lot of these names we talked about bottomed out around Halloween, and that is the case here as well. October 27th. Was the low for this one, 433. Then it shot up. It really liked the rate hike euphoria, or I should say rate cut euphoria we were getting out there. Rate hike euphoria, a little bit of a different thing. It got up to 6 1/3, 636. That was back right at the end of the year, December 26th. And then pretty much ever since the start of the year, it's been straight down. It gets down 22% just this calendar year so far already. So been a rough year for Ericsson. So they had a short-lived window in which things were hot. And now they're not quite back to where they were. Still about 50 cents above it, but not looking great either. But you know what, Mr. Rock Lobster? And there was a whole mess of paper going up in Ericsson out there today. A lot of people loving the 5 strike out there today, including we got about 8,200 of the 5 puts going up today. So a lot of people play on the 5 strike. But what caught our eye was on the other side of the options chain, Mr. Rock Lobster. The call side, in particular, the April 5 calls expiring, coming up this week. This is a weekly call play. It's like somebody gobbled up nearly 3,000, 2,781, lifting the offer for 15 cents. The stock at the time was about 488, so right pretty much a little bit above where it is right now. This seems to be a pretty straightforward little earnings swing for the fences here, Mr. Rock Lobster. We'll know by the Thursday show, if not by the end of the day today, whether these worked out. What are your thoughts here? I mean, I know you've been burned. I've been burned on some telecom upside of late. What are your thoughts on someone going back into the fire this time in Ericsson, sir?
I have to say, now, we have had our travails with Vodafone, which they're not exactly the same company, but they're just a large European telecom that they just don't go anywhere. Didn't Ericsson have some cool stuff back in the day? Did they have phones?
Oh yeah, they had some really cool phones. Yeah, they had partnered with Sony. There were a lot of Sony Ericsson handsets. Couldn't really get them here in the US, but they were cool.
Yeah, I mean, and this is like the classic, $24 billion revenue company that just goes nowhere. Nowhere. I mean, they pay a dividend. Let's see here. They've been paying dividends. Earnings, okay, sort of hard to tell exactly. You know what? I'm just going to say the stock could move. But first off, you can't get a whole lot cheaper than paying 15 cents for a call that's only 16 cents out of the money. So I mean, I think that they have a shot. They're going to try some earnings love and see if they get it, and I hope they win. But the I'm looking at all the put volume, and that definitely looks a little more. Are they whacking out the 5 puts? Because there's 8,000 traded today. It's double the open interest.
Yeah,
so.
a boatload of them. At first, it looked like it was kind of closing, but yeah, right now more have gone up to the point where it looks like it.
Yeah, and it does look like they're buying a ton. So I don't know what side of the coin they're on, but at least for right now, it's it does appear to be they're buying calls. They think it's going up, but the put volume is looking pretty overwhelming on the other side. Like, I guess, where does the $5 stock, the $4.84 stock go? But over the last year, we laughed and then we saw them all go lower. So it certainly can happen.
That it can, listeners. In terms of where the puts are trading right now, let's see. The puts were going up today for prices around 30 cents. Looks like almost all of them went up for 30 cents. So 3,000 again. So what did you rather buy? They could be legging into a little bit of maybe these calls are just to cover their butt. They bought a ton of the puts. They said, let's throw a couple of calls in just in case. Calls for 15 cents. The puts were 30 cents. Obviously, the puts are in the money, so they're going to have a little bit more meat on the bone. So 5 puts for 30 cents or the 5 calls for 15 cents. Kind of a dealer's choice out there in Erickson. As we keep on rolling, it's one of those days, listeners, not a lot really going up. We got to kind of really make the Eye of Sauron work for its money today as we go out to another kind of sleepy name and a newcomer to the network. This is HashiCorp Inc. Ticker symbol HCP. You just know that name, listeners. It's just awesome. You know, it's a freemium tech company out of San Fran. That's pretty much what they are. They make tools that enable developers to secure and run cloud operating infrastructure, blah, blah, blah. 23.5 off nearly $1 today. So a rough day for HashiCorp on the year. Not a great year, but they've had moments. They were trading almost $28 a year ago. They're off about 4.25%, 15 1/3%. They got as high as 36.40. That was back on June 5th. Then D-Day was a rough day for them. June 6th, they kind of fell out of bed right after that. June 8th, they got down to about $25, so they fell pretty much $10. And obviously, some bad earnings or something out there. And then they kept selling off the rest of the year, got down to their low of about $18.91, again, right around Halloween. And since then, rallied hard, back up to about 28 2/3 on March 18th. And now they're kind of giving it back up, including a big sell-off in the last few sessions down to where they are right now. Again, $23.5. And Mr. Rocklops, this is another one that has kind of paper all over the effing place, to put it mildly, out here today, including what looks like some put spread and maybe call spread rolls out here. We got the, I think, May 25 puts rolling down to the 23 puts, and we got the 22 puts going up as well. All kinds of 1,700 lots going up, but those all went up as a spread. What went up earlier that kind of caught our eye first was a 1,723 lot of the May 29 calls. So I said we're at a 23.55, so 29 calls, listeners. That's a fair way out of the money. And looks like they paid a quarter for these. These were a dime at 35 cents. The stock was 23.84, so 30 cents higher. And not enough to make a quarter bid make sense, I don't think. But c'est la vie, they did trade these bad boys. There are earnings coming up outside of the realm of these options June 6th. So D-Day, clearly a rough day for them. Last year was not good. We'll see if they can make it better this year. But Mr. Rock Lobster, all kinds of paper rolling up out here, including this 1,723 lot of the May 29s. What do you think, sir?
Well. Let's see here. Like the healthcare HCP, like that's another HashiCorp. I thought this wasn't this a? Nope, I totally had it wrong. I was thinking of some healthcare company, but automating. Oh, they don't have AI anywhere. I'm into 8 lines of their That's
why they're selling
description.
Off. There you go.
And I don't see AI anywhere.
You can't sell off if you have AI in your company description.
Yeah, you can't be a tech company. Nomad is its scheduler and workload orchestrator, but they don't say AI anywhere. How are they going to make any HashiCorp? How are they going to make any money? Again, interesting. This does not appear to be an unreasonable call purchase. kind of a little bit of a tech company. I mean, I could see that these calls could pay. Possible, but $6 out of the money. Why pay a quarter for the 29s when you can buy the 25s for 85 cents? Like you can buy that spread for almost nothing. So I would say not my favorite purchase. There's, like the stock could go up. It has been recently as high as 29, but it's definitely fallen off a cliff right now. I would kind of opt for the spread. I don't know if that buying the 29s are the best. Pre-earnings and everything looks kind of uggy right now. But I mean, it was just $27 3 or 4 days ago, so maybe they know something. I think it might be worth keeping an eye on, but I would opt for a call spread that costs almost as much money and you're starting basically at $25. So that would be my biggest problem with this one. A little it's kind of like a little bridge too far, even though the stock was there or close to there over the last month. Feels like it kind of bridged too far in these conditions right now.
What fun is that, suggesting a reasonable alternative, sir? No, it is swing for the fences, go broke, or go to your private island in the Bahamas. Those are the two choices here. And never the twain shall meet as we keep on rolling into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, let's get to it. The Strategy Block. Some folks say it's the best portion of the show. Why? Because I have saved almost 11 minutes for Uncle Mike to hold court on his top 5 strategies for hunting rogue androids in a dystopian future. Uncle Mike, the floor is yours. Have at it, sir. What's your gun caliber? What kind of trench coat you going for? Inquiring minds want to know.
Well, I mean, I have a 12 gauge, and that's how I go. That's how I hunt pheasant and ducks, and so I imagine if I needed to hunt some rogue androids, that's the way with which I would do it.
I don't know if the shotgun's getting it done with an android. You might need, I don't know, maybe a slug in the shotgun. I don't know. You got to need some stopping power there, sir.
Need a little more firepower, huh?
Yeah, I don't know.
I'll see what I can do with maybe I can get a 357 or a 50 caliber or something like that.
And how's your trench coat? How's your trench coat game? Because dystopian future, you got to look the part.
Well, I don't have a trench coat, but I do have some. I have Hodgman waders and Hodgman camo gear, so will that help me out at all?
I don't know. You're working in a cityscape. I don't know if the camo might make you stand out more than anything.
Well, I mean, true story. When I had to get off the train back in my Options Express days, I actually did wear, and it was like 20 below zero in the winter, and I had to get off the train. I literally did walk through downtown Chicago, and the mecca of all option trading, as camoed out as I could be. But good gosh, I was warm. I was the only one that could say that. That's for sure.
Well, there you go. Maybe the androids will see you coming, but at least you'll have some festive camo wear to show off, sir.
No doubt. Well, one thing that I do want to point out right now, that I think these are some things with which I'm looking at right now. I've been talking on the show quite a bit about how I'm playing this inverted yield curve in the bond world, in that primarily a vast majority of our bond holdings are very short term right now. And because of that, when we've had these drawdowns in the bond world like we have, it's really not hurt us that much, if at all, for the majority of our holdings. Now, of course, the disadvantage to that is if we have a sudden rally in the bond space, then the only thing you don't participate on. So the way with which I've been trying to have my cake and eat it too is buying some calls in longer term bonds at a lower rate. This is what's interesting to me right now. Let's say that you do want to get into the bond world right now, but you're still scared to death, but you really like the yields right now. You're not necessarily in it for appreciation of the bonds, but you like the yields. And so this is not a recommendation, nor do I have this trade on. These are just some things that when I try to tirelessly look for things to talk about on the strategy block, I find things. And so if you could own TLT over the course of 6 months, approximately, or till October, capture the yield on it, but not have any of the downside risk, it might be something to be interested in. So as I'm looking at this, now you probably can get similar results by just owning shorter term paper. Because right now, if you look at the yields of various things, now TLT tracks longer term bonds, and current yield on the 20-year is roughly 4.8% approximately. And in a 6-month yield, it's roughly 5.3%. But with this, if you don't want to buy specifically a 6-month treasury in some way, shape, or form, one thing that you could consider taking a look at are collars on TLT. Now, let's start with this to where right now TLT it's trading at 88.70. TLT is an ETF that tracks 20-plus year treasuries. Currently, what you can do on it is you can sell an October 89 call for $4.20. I'm splitting the bid ask. And you can buy a 88 put for $3.30. So in doing that, you're creating kind of a split strike conversion, or pretty close to a conversion. You're getting a 90-cent credit by doing that. And that 90 cents covers all of the downside from 88.70 down to 88, and then 20 cents. So worst case scenario, you got 20 cents guaranteed over 6 months. Woohoo! Now with that, the yield during that time frame, you're not going to get a lot of upside. You can get 30 cents of upside at most by doing this. Mathematically impossible to get any more. But the yield that you will get on TLT during that time is 4.22% annualized, or a little over, just kind of depending on where things fall, how things work out. But you're going to be getting, I'm sorry, I meant to say 4.8%. I misspoke. I believe I said 4.2, but 4.8 is about the yield you're going to get. Now, with that, if you were to just buy a 6-month treasury and just hold it for 6 months, same time frame, current 6-month treasury yield is a little bit higher than that, roughly 5.3%. So is it worth it? Should you do it? Based upon this, you should not. But here is where it can get kind of interesting on this. Let's say that you want to be an option trader and you want to do some trading on this. Well, we have traders on our show, so this could be something that could be of interest. You can set up that collar, as I discussed, and then maybe you can sell some puts to create some other income to the downside on it. Perhaps you could sell weekly puts on it. So for example, let's say you went, I'm just randomly thumbing through things right now. Let's say you wanted to go out, sorry, just making my screen. Let's say you wanted to go out roughly a month. If you wanted to go out roughly a month, then you could sell, let's say, the 84 put for May for 33 cents. Now, by doing that month in, month out, you still have protection down to the 84 level for the time being, and you're collecting an income for it. This could be just one way with which you could do things to enhance what your yield is in the bond world. Now, once again, what I've been doing is I've been just buying shorter term paper and then buying calls on the long term to protect myself in case we have a rally to the upside. If you're not bullish to the upside, or you're not concerned with a rally to the upside, and you think maybe we're going to go down a little bit more, but not a lot, this could be something to consider to where you have a decent amount of protection on the downside and you can make things work like this. So I encourage people to be creative with their bond holdings. Don't just put money into a CD. Don't just put money into a bond fund or something like that. If you can, of course, but if you want to get a little bit more creative, this is just an idea that I have them working on right now to see where we go with it. And that is my strategy of the day.
All right, listeners, and now let's keep on rolling. What are your choices for trading in these crazy treasury and yield environments, or maybe hunting androids in the future? Let us know as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. Speaking of you folks, really quickly, what you folks have on the brain right now, we just fired off a fun little question of the week right before the start of the show, asking you kind of the question of the day right now, which is, hey, the market's been in pretty much rally-ho mode for quite some time. In your opinion, what is the biggest driver of this rally? Gave you two choices and the infamous other, the Fed or the AI revolution or other. Right now, the Fed taking it 57.1% of the vote, 42.9% going for the AI revolution. No votes for others, but then again, it just went live a few minutes ago, so I'm sure that will evolve over time. Get over there at Options and make your voice heard out there. As we go around the horn, see what everybody's keeping an eye on. Mr. Rock Lobster, what is your vote right now for what's driving the rally, the AI or the Fed or other? And then B, what are you keeping an eye on until the Thursday show?
I think what's keeping the rally going is AI and tech. Like the future, it's always what has driven markets. So I think that's what the crowd is saying. I don't think the Fed right now, I think they're blocking and tackling. They can't do much anymore except raise rates. And what I'm looking at for this show is basically the week of earnings. You know, what are we going to get for earnings this week? If it lifts the market or not. We got higher interest rates and we got some, Middle East conflict. So, I think the market needs good news to get back up. We're at maybe a 2-week low. We're kind of threatening the 5,000 level on SPX here. So I think we need some good news.
Yes, we do. And Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on until the Thursday show? And also, what do you think is driving this partay right now? The Fed, the AI revolution, or other?
I think all of the above. I think it's AI, the Fed, and conflicts in the Middle East. So all of the above, even with other included. In terms of what I'm watching for next week, in addition to the earnings, as Andrew said, I'm really watching the bonds, seeing to where, in case you couldn't tell from the strategy block, seeing how low we can go. We're still a little ways above support from back in October. We're 6 months away from it, or it's been roughly 6 months since we were at these levels or close to them. So watching to see if we can hold these levels and fires come in the bond market.
All right, listeners, and that music coming in means that is the end of the old OB. But luckily for you, because we like you folks, it is not the end of our content on the network today. Nope. I'll be back in a little bit with our old buddy, Mr. Greg Magadini, to break down all the madness in the crypto space. Yeah, this sell-off we saw towards the end of last week really hit the crypto markets pretty hard as well. What's going on out there from a volatility, from a skew perspective, and everything else? Tune in to the Crypto Rundown a little bit after this program to find out. If you're hanging out in the live, just hang out. We'll be back in a little bit. If you're listening after the fact, just hit next on your podcast player. Of course, that's if you're subscribed to the full network. If you're just subscribed to the old OB, you're going to miss out. So check out the full network on your podcast player of choice. And of course, check out the pro, theoptionsinsider.com/pro. If you want to join us live as we go around the horn, Mr. Uncle Mike, if folks want to debate your shotgun and or trench coat choice for hunting androids, and also maybe talk a little bit of bond yields, where should they go? What should they do?
Follow me on Twitter at Mike2Saw, TOSAW. Check out my website, stcharleswealth.com, if you'd like to have a call with me.
And Mr. Rock Lobster, same question for you, sir. What are your choices for hunting androids in the future? And B, where should folks go if they want to debate them with you?
I don't know. I think the shotguns would still work. Didn't they have shotguns? I was trying to remember. I guess they did have some kind of flashy hardware.
Anyway, he had like a big hand cannon.
888-trade01optionpit.com. You get 10% off. And you want to learn how to trade, position, manage a portfolio of options, become an option trader, and just instead of winging 5 lots around at YOLO contracts, kind of option pit. We've been doing it for, Mark's been started 2011, so 2010, 14 years. 14 years.
There you go. Check them out, optionpit.com. Let us know, what is your weapon of choice for hunting androids? I guess it kind of depends what you're looking at, right? If you're going, T2, he did use a shotgun there as well, but that was more of a soft kind of exoskeleton creature he was fighting for. A hard metal exoskeleton, something probably a little bit more armor penetrating than the old standard 12 gauge. But hey, to each their own. It might be a fun little holiday question of the week poll we could do. What is your weapon of choice for hunting androids in the future? Let us know as we'll keep on rolling. Back again in a little bit with the crypto rundown. Back again throughout the rest of the week with our usual array of content, listeners, until we're back again on Thursday. Another episode of The Option Block. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.